Let's cut to the chase. Are we in a recession? The answer isn't always simple. A recession is marked by a significant decline in economic activity, usually for a sustained period. Think 2 consecutive quarters of negative GDP growth. But there are other indicators too. We look at unemployment numbers, we look at consumer spending, we look at manufacturing data. These are the vital signs of the economy. Right now, these indicators are sending mixed signals. That's why it's premature to definitively declare a recession. Uncertainty is in the air. But here's the thing about uncertainty. It breeds opportunity. And that's what we, as investors, need to focus on. Don't panic. Strategize. We've weathered storms before and we'll weather this one too. Remember, fortune favors the bold. But boldness without a plan, that's just reckless. Let's clear up one common misconception. Market corrections are not recessions. A correction is a short-term decline in the stock market. It's like a speed bump on the road to economic growth. They're normal, even healthy, for a market to experience. Think of it like this. The market climbs a wall of worry. Investors get enthusiastic, maybe a little too enthusiastic. Prices rise higher than they should. A correction is simply the market taking a breather, readjusting to a more realistic level. Don't let the financial jargon scare you. We've seen this movie before. Remember the dot-com bubble? The 2008 financial crisis? These were significant events, but the market recovered, and it will recover again. The NASDAQ, our beloved tech-heavy index, is taking a beating. The high-flying darlings of the pandemic era are coming back down to earth. Some investors are hitting the panic button. I say hold your horses. Yes, the NASDAQ is in correction territory. But this presents a unique opportunity. Remember, every correction is a buying opportunity for those who are prepared. The key is to be selective. Look for companies with strong fundamentals, solid earnings, good management. These are the companies that will weather the storm and emerge stronger. Be greedy when others are fearful. This is your chance to buy into great companies at a discount. Section 4. Global currents, oil prices, and the Indian rupee. It's not just about the NASDAQ. The global economy is a complex web of interconnected factors. Take oil prices, for example. The recent dip in crude prices is welcome news for consumers, but it has implications for oil-producing nations. Then there's India. The Indian rupee is strengthening against the US dollar. This is good news for Indian consumers, as it makes imports cheaper, but it also makes Indian exports more expensive, which could impact economic growth. The takeaway? Keep a close eye on global macroeconomic trends. They can have a ripple effect on markets worldwide. Don't get caught off guard. Stay informed, and be prepared to adjust your investment strategy accordingly. Section 5, Crisis Comparisons, 2008 versus 2025, a tale of two markets. Everyone wants to compare the current situation to 2008. But let me tell you, this is not 2008. Yes, there are challenges. Yes, there is uncertainty. But the underlying fundamentals of the economy are stronger. We learned from the mistakes of the past. Regulations are in place to prevent another meltdown. The financial system is more resilient. And most importantly, we as investors are more experienced. The bottom line is this: don't let fear dictate your investment decisions. Stay informed, stay disciplined, and stay focused on your long-term goals. The market will recover, it always does. And when it does, you want to be positioned to reap the rewards.